Chapter 15, Section 7.3, ED April 2011, Proposed Revision to ISAE 3000. Background: ISAE 3000, Assurance Engagement other than audit or review of historical financial information, was approved by the IAASB in December 2003. At the time of its release, the IAASB acknowledged assurance services as an evolving field and accordingly decided that the IAASB should keep practical implementation of the ISAE 3000 under review. Since its issuance in 2003, practitioners and national standard setters have gained considerable experience with ISAE 3000. That experience had identified a number of opportunities for revising ISAE 3000 to clarify how some of the core underlying concepts should be applied in practice. The IAASB commenced the project to revise ISAE 3000 in March 2009. In accordance with its commitment in its strategy and work plan 2009 to 2011. Section 7.4, XBRL, the Emerging Landscape. The IAASB issued a question and answer paper in January 2010 to highlight the growing interest in and use of XBRL and raise awareness about how XBRL tagged data is prepared and how it may affect financial reporting. The IAASB also clarified that the IAASB's auditing pronouncements could not impose requirements. The IAASB also clarified that the IAASB auditing pronouncements currently do not impose requirements on auditors with respect to XBRL tagged data or the representation of this data. Key messages: XBRL is an electronic business information format expected to provide benefits in the preparation, analysis, and communication of business information. The use of XBRL can vary by jurisdiction and may be driven by regulatory requirements or voluntary application. 3. Under the current international standards on auditing, auditors are not required to perform procedures or provide assurance on XBRL tagged data in the content of audited financial statements. Accordingly, the auditor's report in accordance with the ISAs on the financial statement does not cover the process by which XBRL data is tagged. The XBRL tagged data that results from this process or any representation of XBRL tagged data. The IAASB is currently undertaking a consultation to determine the needs of preparers and users of XBRL tagged data. This consultation will assist the IAASB in assessing whether it is necessary and in the public interest to develop a pronouncement addressing association with and/or assurance on XBRL tagged data. Section 7.5, Significant, unusual, or highly complex transactions. Material misstatement of financial statements, including fraudulent financial reporting, can arise from significant, unusual, or highly complex transactions, especially those that pose difficult substance over form questions, such as transactions not in the ordinary course of business undertaken with related parties. The ISAs give particular attention to the accounting for and the disclosure of such transactions in the context of the auditor's identification and assessment of risk of material misstatement, whether due to error or fraud, and the auditor's responses thereto. The IAASB issued a question and answer paper in August 2010 to highlight requirements and application and other explanatory material in the ISA that focus on specific audit consideration relating to significant, unusual, or highly complex transactions, including significant transactions outside the normal course of business and those occurring at or near period end. They recognize that significant, unusual, or highly complex transactions may by nature carry a higher risk of material misstatements and therefore merit greater attention. The underlying concepts of professional judgment and skepticism were re-emphasized. Reform of the audit profession. Section 7.6. Reform of the audit profession. Following the global economic crisis that began in 2007-2008, European legislators have discussed whether there is a need to reform the audit profession. Whilst not obviously of immediate relevance to Nigeria, students should be aware of such important discussion in the global accounting profession, given the principles involved and that fact that decisions might ultimately impact the Nigerian accounting profession. Two key discussions are summarized below. EC Green Paper on Audit. In October 2010, the EC Commissioner for Internal Markets, Michael Barnier, issued a green paper entitled Lessons from the Crisis. The paper discussed a number of potential reforms to the audit profession, including ideas such as 1. Mandatory auditor rotation, that is, not just partner rotation but the whole firm. 2. Mandatory joint audit for large companies. 3. Expanding the audit reports. 4. Reducing existing barriers to entry into the audit market in order to improve competition. 5. Restricting or even banning the provision of non-audit services to audit clients, e.g., risk management, bookkeeping and accounting records preparation, legal and valuation services, tax advisory and consulting services. 6. Audit quality certification. The paper has prompted lively debate at many levels, including the Accountancy Institute, boards of directors, audit committees, government bodies, and various industry experts. The arguments range from a conclusion of significant blame to the suggestion that audit quality was not a factor in the crisis. One theme that does seem to be generally accepted is the need for greater transparency of both the audit procedure and maintenance of independence. Referrals of the audit market to the Competition Commission in the UK. In reaction to concerns about the lack of competition plus barriers to entry and switching within the UK audit market, currently dominated by the Big Four accounting firms, the UK's Office of Fair Trading referred the audit market to the Competition Commission on 21st October 2011. In 2010, the four largest firms, PwC, KPMG, Deloitte, and Ernst & Young, earned 99% of audit fees paid by FTSE 100 companies. Between 2002 and 2010, the average annual switching rate among FTSE 100 companies was only 2.3%. The Competition Commission has has significant statutory power and could introduce radical measures in order to open up the UK audit market. In the extreme, this could force the divestment of large firms' assets or even large-scale breakup. Chapter review. Before moving on to the next chapter, check that you now know how to 1. Discuss current affairs impacting the audit and assurance industry. 2. Describe the demand for social and environmental reporting. 3. Summarize what is involved in a social and environmental audit. 4. Explain the current debate and the exposure draft in circulation. Quick quiz questions. Which of the following is an argument against limited liability partnership as a structure for an audit firm? A. Loss of joint and several liability. B. Element of choice to whether to adopt LLP structure. C. Loss of perceived integrity. D. Loss of taxation advantages. The answer is C. Some commentators argued that the traditional partnership structure encourages high standards of behavior amongst partners, since they have unlimited liability if they are found guilty of acting dishonestly. And LLP might therefore reduce the perceived standard of integrity in the profession. Question 2. Which of the following statements is incorrect about the requirements of the Sarbanes-Oxley Act in the USA? A. The Audit Committee must approve all audit and non-audit services provided by the external auditor, although not necessarily in advance. B. There must be full disclosure to shareholders of all fees for both audit and non-audit services provided by the auditors. C. The auditors should report to the Audit Committee on any critical accounting policies that management are using to prepare the financial statement. D. The audit firm cannot be considered independent if a senior accounting executive in the client's company was a member of the audit team within the previous 12 months. The answer is A. The provision of the Sarbanes-Oxley Act include a requirement that the Audit Committee should approve in advance all audit and non-audit services provided by the external auditors. Question 3. Which one of the following is not an argument in favor of small company audit? A. An audit gives reassurance to user groups other than shareholders, such as trade suppliers. B. An audit can help to identify potential for improvement in economy and efficiency. C. Lending banks usually rely on an audit report for lending decisions. D. An audit can help to impose internal control discipline on a small company. Answer is C. Banks usually do not rely heavily on audited financial statements for lending decisions to small companies, although they might use audited financial statements if they are available. Question 4. Which of the following is not true about environmental audits? A. They are mandatory for all quoted companies. B. They are additional to the annual audit. C. The objective is to contribute to safeguarding the environment. D. The external auditor may perform an environmental audit. The answer is A. Environmental audits are not mandatory in general, although in some countries, many companies are required to include information about environmental risk in their annual business review. Question 5. A sustainability report might report on three aspects of performance, sometimes referred to as the three bottom line. These aspects of performance are A. Corporate governance issues, social and environmental issues. B. Compliance issues, social and environmental issues. C. Financial, social and environmental issues. D. Corporate governance issues, environmental issues, and financial issues. The answer is C. The triple bottom line methods of reporting is to report on financial, social, and environmental performance and targets. This is different from ESG reporting, which report on environmental, social, and governance issues.